Welcome to the Real Vision Daily Briefing. It's Thursday, August 19, 2021. I'm Ash Bennington, joined once again by Tom Thornton of hedge fund telemetry. Here's what we're looking at right now. Market close looks like the Nasdaq and the S&P pretty much unched. Nasdaq settling at 14,541, S&P 500 at 4,405. Russell 2000 down materially, off 1.33% on the day to close at 2,129. Dow Jones Industrial Average pretty much flat, off a quarter of a percent to 34,871. The big mover, it seems, this week has been the VIX. It's up, looks like about half a percent today, 0.65%, 0.41 points to 21.71. But on the week, the VIX is up. It looks like 36%, 35.6%, a substantial move on the VIX this week. Other stories we're looking at, we've got a FANG update. Amazon and Facebook news today. Amazon is planning to open several physical department store locations. Some big box retailers like Target and Best Buy experienced declines in their share prices during the early hours of trading, but have since pared some of those losses. Finally, Facebook, new antitrust suit. The federal government, the FTC, Federal Trade Commission, filed a new complaint against Facebook today, this time after the initial antitrust complaint was dismissed in federal court in June. But District Judge James Boasberg has given the FTC a second chance to resubmit since they have amended the complaint. Facebook has until October 4th to respond to the new complaint. Boy, that's an interesting juxtaposition, Tommy. You've got Amazon moving into more markets and Facebook getting smacked with another FTC complaint.
Yeah, you're going to see a lot more of that, I think, with Lena Khan, the new FTC chairwoman. She is a rigorous antitrust advocate, and I think that was a very big surprise to many that Biden selected her. She was known, but I think it's a real big step of what's to come. And I think two senators, my Senator Blumenthal in Connecticut, and I forget the other one, they sent a letter to her regarding Tesla and the deceptive autopilot marketing practice. And so they're very aggressive. It's much different than the previous 4 years.
Yeah. Speaking of rigor, Tommy, you are a rigorous participant and watcher and analyst of these markets. What are you seeing happening in capital markets today?
Gosh, I'll tell you, the markets are flat, and breadth in the market is atrocious. Both the NYSE and NASDAQ Composite almost down 2,000 issues each, and that's really negative. But of course, you have Apple and Microsoft combined, which I think they're the two largest right now. They're up 1.46% combined. I have little monitors that customize, different indices, and I put those two together. But that really has held up this market. We've seen very narrow breadth with the big mega cap names really holding up the place. And why wouldn't you buy Apple and Microsoft? They're great companies. They're printing money. They're buying back stock. They have dominant products. But we'll see. We'll see what happens. We could just run out of buyers in these names, and then again, the FTC or something could happen. Apple's already been mentioned and looked at for their App Store. Microsoft, I think they're kind of out of the harm's way with antitrust. They went through that already 20 years ago.
Yeah, I remember Judge Penfield Jackson. That was one of the triggers for the eventual sell-off on the .com bubble back in, what was it, April or May of the year 2000. Tommy, you mentioned those. Go ahead.
Oh, one thing, that wasn't such a bad thing. However, it wasn't like Microsoft was dominating on the internet, but they gave away their browser for free. and that's sort of not antitrust. Usually, you sell something and you make more money off of it, and they were really not so great. But I think, and it could happen with some of these big mega cap names. It could be Facebook, it could be Amazon, it could be Apple, Google. Obviously, is among the biggest. What might happen is they might just, you know, put a speed bump in front of them as far as them being able to go out and acquire companies, or they might split up some things. But Microsoft actually, when that they couldn't do anything, and their stock went sideways for 10 years. But that also, you could see new companies come around. Google's, notable. Facebook is another one that came on. Apple was able to really move their iTunes to, both Windows and their Mac platforms. And so sometimes these antitrust issues can, spur innovation, spur new companies, and so there's a lot to talk about with all the antitrust stuff going around right now. So we'll leave that for drinks later.
Yeah. Tommy, let's talk a little bit about, to switch gears back to something you mentioned earlier, which were the market breadth indicators, your indicators. I believe you've actually shaped the Bloomberg terminal in terms of the way that these indicators are set up. Give us a little bit of a 101 on this for people who may not be familiar with market breadth and its significance in the way that you view markets.
Right. I look at a lot of different things with market breadth. And I don't like cumulative breadth. That's one indicator that I don't like, and it's used way too much. The composition is faulty. But what I do like, and if someone has a Bloomberg terminal, WEIB Go is one page that I helped the author put together, and it looks at everything from intraday, movers up, movers down, and then percentage of stocks above the 10, 50, and 200-day moving averages. And I like to look back with a lot of indicators. And for example, it's pretty simple. If you look at the percentage of stocks above the 50-day moving average, in the, let's see, I wrote it down here. The Dow, the NASDAQ Composite, NYSE, Russell 1, 2, and 3,000, mid-cap 400, small cap 600, all of those have more stocks under the 50-day moving average. And the S&P is around 55%. And it's still, I think, about a percent-ish above the 50-day. It bounced off of it. I think it's going to be tested again. Look, we've seen this since November, 200 days of a market. The S&P has not gone down and corrected more than 5%. And what makes that a little concerning to me is markets need that up and down rhythm to take away some of the froth, and it shouldn't be this easy where every day it just seems to move higher. And it's lured a lot of people in this year as well. You've had more inflows in the first half this year than the last 10 years combined. And so there are a lot of new people, and we've just had this very subtle move higher with really no volatility until this week. So if we do see a pullback, sometimes when you don't have those pullbacks and just checking yourself on the way up and not letting people get in, there could be a larger dislocation. Now, I follow Tom DeMark's work, as everyone knows, and Tom has been vocal, seeing a lot of things, markets, indices in alignment, daily, weekly. We had the Dow, we had the S&P, we had the NASDAQ recently. The problem is we've had several other daily indicators that set exhaustion signals over the last year. And we've seen pullbacks that are, short-lived, 2, 3, almost 5% one time. And then it's right back and running straight up. So I think that we're at risk right now. And if things start to unwind, there's a lot of option gamma that's rolling off tomorrow. In other words, there's a lot of people the dealers who have had to hedge all the call buying, they could have to unwind that. And they will have to unwind it with expiration. And we've seen it happen in the past where it could, see a little vacuum lower in the next couple days. Could be tomorrow, could be Monday. So I just think that it's a very complacent market. The European markets had a bad day today, really bad. And there was a story around that the SM or the Euro Stock 600, the volume is so low right now. And of course, it's Europe. Everybody's at the beach, but still, it's that complacency that's right now happening. And if there's any sort of bad news, you're going to see some things get whacked and get whacked kind of hard. And we saw that with some of the retailers in Europe.
Yeah. Tommy, there's such important context and I think framing around a market that when you look at the year to date chart, the 1 year chart, it just looks like a 45-degree angle up. These are really important internal dynamics to point out so that people can understand it in a richer and fuller sense. By the way, Tommy, we're being asked in the questions if this is pre-recorded. Are we pre-recorded right now?
No, we're not. We're here.
No, I think we are pre-recorded. We just went back in time and then broadcast this later because we've got
Oh yeah,
so we're answering.
yeah. Gosh, I wish we could do some psychic stuff. Anyway, no, it's live. We just talk and have a nice time discussing the markets, and that's what I really like about the daily briefing because it's not scripted. We have some notes that we're talking about, but it's you and me talking, and we really enjoy each other. So let's continue on.
Yeah, and jump in and ask us your questions here so we can get them on the show. Tommy, we were talking a little bit off camera right before we got on about WTI, about Brent. What are you seeing in the oil markets today?
We were really bullish on energy and crude and energy stocks, and we had some upside exhaustion signals in late June, and I sold everybody's energy stocks out, and I get more questions. I get so many questions, overwhelming. When can we go back in and buy energy stocks? And one of the more frustrating things about this market, I'm sure everybody will agree, is that we don't have a lot of follow through. So you'll get this like 1 day big move in energy, and all of a sudden the next day it's like, today it was materials. China, announced some stuff on iron ore, and that got killed. I was telling people that I really like some of these materials and how they've been working, and it looked like they could go on. But there you go. You have Alcoa down 11%, X down 7%. I mean, it was just like, not fun. But that's the frustration of this market. It seems like it's going up, but if you try and pick some sectors, you could get clipped the next day. It's just lack of continuation. That's what's really frustrating to me.
Yeah. We're also live on Twitter, Tommy. I'm seeing now live on Twitter. So if you'd like to drop some questions into Twitter as well. Tom, I've got a question for you. It's kind of a non sequitur left field question. We're having this conversation. We've been talking now for almost 15 minutes. One thing that hasn't come up is what's happening in Afghanistan. This is a massively significant geopolitical story, and yet it just doesn't seem to be getting any pickup in market circles. Why is that? Do you have a thought on that?
There's rare earth minerals there that down the road, some country's going to go in there, probably China, and harvest. But China plays the long game, so they're not necessarily in need of getting in the trucks and going to Afghanistan immediately. So that's, in my view, the wait, hold on, sorry, Bloomberg TV just turned on. I don't know, live TV. So I don't think that there's no energy there, that it's not an energy related issue. I think a lot of people are hugely disappointed with the way the U.S. conducted this, and the idea of getting out of Afghanistan is an A plus. The execution was an F, and I think it really just hurt the stature of how foreigners looked at America and the American leadership.
Right.
I think there's a big void of quality American leadership right now, and this is, and I don't know really anybody on the horizon that I can jump on board and say this is going to be the next one. So I don't think there's really any market related issue. If there was terrorism or other things happened, yeah, that would matter. But right now, the biggest concern in the market is most likely the COVID Delta we're seeing a lot of people. I think 3 senators today just announced that they got it, and the Texas governor got it.
Greg Abbott.
Another Real Vision Daily Briefing commentator got it. I'm not going to mention his name, but I hope he feels better. And they're all
we
back.
hear he's doing well, we should say.
Good. Yes, he's fine. I think he's just pissed probably, which is probably more in his, demeanor. But, the bottom line is, if people are getting it and they've been vaxxed, and I've been vaxxed, I'm sure you've been vaxxed. If we start to get it, I think that's going to be a bit concerning. And Scott Menard from Guggenheim was out today saying that the taper might be delayed if the impact of Delta becomes significant on the consumer. And yeah, that's possible. And look, everybody knows the taper's coming. We know it's coming. They're going to talk about it at Jackson Hole or the next Fed meeting, and it's probably going to happen starting in December. It's so telegraphed. But if they start tapering with growth slowing, and they have to taper, I think the market could get a little nervous about that. So look, I think that this Delta thing's going to probably get a lot more news headlines in the coming weeks. And I certainly hope that it goes, it calms down. But I think that's a real risk right now. And look, the other thing is growth could be slowing. And I've talked about it for months, saying, look, once we get the reopening, it's going to start to do this and become more normal. We've had this real big spike in inflation. We've seen, some transitory things like travel, used cars, things like that have really skewed those numbers higher. But wages are going to stay higher. Prices on food and energy and travels or gasoline. It's going to stay high. That's not coming down immediately, and that is going to be a problem for growth going forward, and it's going to hit the consumer hard. That's really, I think, starting to percolate. And one last thing before I take the next question. 2000, we had this terrible market that came off of one of the best bull markets ever, and then it got nervous in the spring. It bounced back in the summer, and everything was status quo. But some real big companies started to come out and guide numbers lower. And that's going to be the thing that I believe in the third quarter, maybe starting in September, we're going to see some slowdown. And that could be margin pressures, that could be a lot of different things. But if companies start guiding down, I think the markets are going to really feel it.
Yeah. We've got some great questions coming into us from Twitter, from YouTube. But I wanted to call back to something we talked about a bit earlier, which were the FANG stocks, this time in a slightly different context, to set up a clip from a show that we did today with Rex Woodbury and Piers Kicks. This is live on the Essential Tier. The topic is the metaverse and big tech seeking to occupy that space. Let's take a look at the clip.
The internet's evolving, and so too most of the companies that were born from it. And as far as those companies go, there's relatively few that kind of possess the firepower to really, orchestrate a sort of advance into this new digital frontier. And Facebook owning Oculus obviously is probably one of their best plays ever, I'd argue. It's sort of obviously the dominant sort of standalone headset on the market. It's a primary window into the embodied internet, as Zuckerberg also called it. But yeah, I mean, it's an incredibly powerful sort of chess piece there, right? In the same way that, Apple kind of owns the hardware and, with the iPhone, and therefore decides everything that goes on it. The whole reason there's this big Epic versus Apple debate right now, potentially Facebook is in exactly the same position now through Oculus, right? They're clearly making a big bet on it. 20% of employees at Facebook work on Oculus. It's about 10,000 people.
Well, there you have it. Facebook, especially, but other FANG stocks looking at the metaverse, trying to figure out ways, business opportunities, and how to explore that new space. Tommy, I understand you have a question for me about the metaverse.
Yeah, what is the metaverse, please? I'm sorry, I don't know enough about it. I need to know about NFTs as well. So just sorry, I just don't know what the metaverse is, and it sounds something like a Mark Zuckerberg term that to take over the world.
Mark actually jumped in on Metaverse about 24 months after other people were talking about it. They're actually a little bit late to the party, but what it is a shared virtual space at its most fundamental level. It involves basically avatars, which are representations of you and of me that will exist online, so we can go and explore a virtual universe. It has elements of augmented reality, virtual reality, and it's something that's obviously connected and delivered over the internet.
Right. Okay. Okay. That's great. You know what? I'm sort of living in the now right here, like as
Yes.
a real human, and trying to figure out what's going to happen in the real markets. And yeah, more power to them. I'm sure it's going to be great. But speaking of, tonight is the Tesla day for artificial intelligence.
Now, what
And
does that mean? I don't know what that means.
well, okay, well, Tesla and Elon Musk, as everyone knows, has a rich history of doing these fabulous, days. They did Autonomy Day, they did Battery Day, they did, they released different cars and semis, and a Cybertruck. And these are kind of these Elon Musk presentations that oftentimes whatever he's talking about never comes true. And so uh, Elon Musk, he has this vision that artificial intelligence of all the data that they've collected with their cars and the cameras and everything driving around will go back to this giant, uh, massive computer, and it's called like ectotop computer. It's like the strongest computer in the world, and that's what he's going to talk about. How it's going to be this, you know, that's how they're going to, power their autonomous cars and do everything for Tesla. Yeah, I think they're a little further away from really doing this, and it might be just a bit of a distraction that Elon likes to talk about. But if anyone goes back and looks at the Autonomy Day in April of 2019, where 1 million robo taxis will be on the road by the end of the year, and it was going to be this great uh, way for people to earn money with their cars when they're not using them, and Tesla was going to make billions of dollars on it as well. Well, that's just so far away. I think with Tesla, it's getting late for people's patience. I think the government's starting to crack down on their their the marketing of autopilot, full self-driving. And people have paid $10,000 for this feature that hasn't happened. So look, if the government really just clamps down and says you can't market this, I think there could be a real big class action suit against Tesla with all the people that have bought it. And Elon Musk saying it's coming in 3 to 6 months or next year, and it's going to be fabulous, and it's getting better, and we're on version 9.2 or 10, whatever. It's just, why are people beta testing this on open roads and with the thought that it is feature complete? And that's something that Elon Musk has said, oh, it'll be feature complete. It's so far away from feature complete. It's it's not even close. So that's going to be something I don't watch tonight. I'm not waiting up till midnight Eastern time to listen to that guy spew his garbage.
Tell us what you really think, Tommy.
I know. Yeah.
Talking of the here and now, some great questions coming in the here and now from Twitter and YouTube. Here's one that comes to us from MLC, and the question is, Tommy, any interesting DeMark signals you're seeing right now?
Yeah, there's a lot. There's a lot happening on the S&P, the Nasdaq 100. We've had some in Apple daily and just weekly triggered last week. And one of the things that is important that people should understand that don't use DeMark indicators, when you see these 13s, and you can see them, I post charts all the time on Twitter, there's a lot that goes into it that are maybe not on the charts that I'm looking at. But when you do see those 13s, the rule of thumb is you should see a price reversal within the next 12 days, or if it's a weekly, 12 weeks. And if it doesn't happen, then the trend that's in progress can continue. And that may happen. And we've seen this happen before. And the thing is, there's not an indicator that is absolutely 100% perfect, but this has a very good record over the years. It may not necessarily be with the S&P because I think it's a very artificial index that with these mega caps, but I use them in currencies, commodities. Bitcoin has been great. So I think there's a lot of stuff happening. I think Bitcoin, by the way, could move a little bit higher. I thought in this 45,000 level, it would probably stall. We did have a signal that would call for a bit of a stall, and then I think we could go a little higher. I'll post a chart that has the potential for 58,000. I'll do that.
Yeah. Here's another one that comes to us from Vince. And the question is thoughts on precious versus hard metals and also ag.
Oh, well, everything got killed today. I'm out of gold. I had a small position in gold, and that first down day, I said no mas. I stopped out. I'm glad I did. It's bounced back, here, but it's been making lower highs. And the thing is with gold is you really don't have any new buyers coming in, and that's the problem. When Paul Tudor Jones came on CNBC a couple of years ago and says, "I love gold. I want to buy gold," and that's his accent. He's got this southern accent. "I want gold. It's going to 1,700. I'll tell you," and it did because people believed him and they came on board and they said, "That's great. We're doing it." And it's kind of the same way with Bitcoin. If Elon Musk buys it or Michael Saylor buys it, and you have this sponsor, smart person buying it, rich person buying it, you're probably going to buy it. But gold, to me, is just dead money. And I think there's more fear of the taper and what the Fed's going to do than inflation. So, gold is supposed to be the greatest inflation hedge. Well, Bitcoin may have taken some of its the luster of that. But I'm not enthusiastic about any metals right now. They're very oversold. The sentiment on them is terrible. I don't like ag as well. I think those will probably cool off as well. And I might even look at reshorting some of those, the ag, corn, wheat, sushi, rice. No,
By the way, can you do an impression of Ray Dalio as well? Do you have any other hedge fund managers in the stable?
You know what? I once saw Ray Dalio dance at a party, and he's like stiff, but I like Ray. He's a nice guy. He's a nice guy. He's a member of my club.
Here's one from Ralph. I'm just going to paraphrase this one a little bit. He's interested in any picks that you have in stocks, anything you're looking at that you think looks particularly interesting to you.
Okay, I like Ford a lot, and that actually did get a DeMark 13 buy signal the other day. I starting to like FedEx again. That had a buy 13 the other day. I'm just looking at my list here. Actually, I'm going to run a new one here. But I really like Ford a lot, and I think there's a lot of value in Ford. The problem they're having is they can't get chips like every other automaker except Tesla, but they have really good future products coming out, and they're going to deliver on those things. They're going to be the first out with the Ford F-150 electric truck, the Mach-E, the small four-door electric car, has great reviews. It doesn't have all the bells and whistles of Tesla, but it's solid and it does what it's supposed to do. Ford has pretty good service, unlike Tesla, and I think people are going to look at it and say this is a better value considering they do get the big tax credit that you don't get with Tesla when you buy a Tesla. So that I think is a great stock. I think it's really well managed, and I like it a lot. So wait, I'm just looking at. Oh, Caterpillar is getting there. Caterpillar is getting there on my list.
Now, why? Why is that? What indicators? Are you
Just it. I got a DeMark buy countdown 13 today, and so when I get a buy countdown 13, and look, everybody thinks that DeMark signals are always bearish, but I have found a lot of bullish signals. So Caterpillar is one that is down there. Now, what I want to see is I want to see it make a 4-day high. That will give me some confirmation that it's starting to turn. And that's, I usually will buy a little on the 13 and then buy more on the 4-day high and trade it that way. That's sort of my process. So those are a couple right there.
Thomas, we get near the end here. Final thoughts. Sum up what you've been looking at and what you're going to be looking at going forward, and what your key takeaways are since we've last seen you.
Well, it's summer, and the markets, you have a lot of participants that are out, and there's going to be more of them out. I get jealous when I see the out of office emails bounce back to me. I do think that the COVID Delta stories are going to get louder, and I think that's going to cause some concern in the market. Yes, there's going to be more talk as well with getting a booster shot, and that's going to cause even more political, turmoil. But I think that's what we're worried about right now. The Fed is done. They're going to taper. They're going to announce it. When exactly and how much? That's all the question that we're waiting for or to be answered. But that's basically it. I'm a little concerned. I think the markets are running out of steam, especially with the internals are weak. Breadth looks a little. So, I think that everybody should just play it a little safe right now. Seasonality's tough, and I don't think market sentiment is washed out at all. I think it's still actually rather high. And you know what? A correction is not the worst thing, but just have some cash, get ready to buy. I'm starting to see more buy signals starting to show up. I'm not going to buy Alibaba. No, don't buy Chinese stocks. I think they're too choppy, risky. The government's at war with them. Schlumberger looks okay. It's getting there. And some of these energies, it's going to be a time to get back and buy them. They're cheap. They're well managed through this period. Crude prices are relatively still high. So those are places that I'm going to look. I still like banks. I'm long banks. Been long for a bit. That's about it. I'm really looking forward to getting into the fall, getting into the last half of the year, which is my favorite time of the year, and trying to just stay out of trouble. That's it.
Yeah, kind of these summer doldrums. We're now exactly, it looks like 1 week out from Jackson Hole meeting out in Wyoming, August 26th, 28th. Obviously, that's going to be a key time for markets to assess what comes out of there, if it's not more just Oracle at Delphi speak that can't be parsed.
Yeah, it's going to be their boondoggle. They'll go out there, and it's a lovely place, and they're all going to talk their talk, and hopefully we'll get some clarity of what their message is going to be. Bernanke I think he was the one that talked about tapering, or started to change policy at Jackson Hole. So we'll see if Powell does it as well. I think he will. I think it's a calm time to do it.
Yeah, great way to wrap it up. Tom, thanks so much for joining us.
All right, thanks. See you, Ash.
And thanks for watching, everybody. Thanks for your questions.